Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's discuss the situation on the gold market. So if you read the weekly report, actually guys, you will know a lot of interesting stuff, especially on the fundamental background and particularly on the problems that Fed right now has with the supporting demand for the national debt and how it could be played out in a nearest time. So we find that the situation that actually and the problems that Fed currently has, it's absolutely unprecedented in our modern history. So it's the really big problems stand with the financing of the United States national debt. And we have tried to discover this in a report because it has actual direct relation to the gold. As you know, the major driving factor of the gold market is actually not the nominal inflation, but the real interest rates. So as long as the real interest rate stands negative, gold feels absolutely great, despite what the inflation stands and what the rate is. Rate might be 16%, but if you have the negative real interest rate, it's anyway will be supportive for the gold. And currently, in particular situation that we have, we think that the current drop on the gold is not the result of the lack of the demand on the market or rising interest rates, but in the overall policy of the Fed that drawing liquidity out of all markets. So the first peak that has been slotted is the actually cryptocurrencies that have lost 60% of its capitalization already, and it's not the final point yet. Next will be the stock market, and gold is also feeling the pressure, but for the specific of the gold market, it shows really good resistance to the overall processes. So, in two words speaking, the analysis result makes us think that this tendency probably should last for a few months more, which is because recent polls among the investors tells that just few understand the real difficulties, the real situation. By the recent polls, it's overall opinion that chance for recession stands just about 40%. In fact, recession is already stands underway. Well, but until the investor starts to understand it's clear, it's a few months probably will pass. And we also suggest that within the 2-3 months maybe we should get more evident numbers in the statistics suggesting that situation is deteriorating. And by this moment, overall situation on the gold market starts to change. That's our suggestion. So the trading plan that we discussed, long-term view, in long-term trading plan that we discussed previously, stands the same. We do not see any reasons to change it. But we're trying to control it, make an analysis of the current situation and see how it goes. And if you would like to know, you could read the report. Speaking on the technical situation currently, gold has chances to bounce more. Supposedly it might be somewhere to the 19 even within a few weeks, based on the weekly chart that we see, based on the daily chart as well. Currently, actually, market stands not at the resistance, so it hasn't reached yet the confluence. It's not at the overbought, so theoretically it could keep going higher. And here we're just keep moving with our analysis and with our ABCD pattern that we already discussed. Trend stands bullish here on the daily chart, and OP target stands at 1856, making, well, more or less agreement with this confluence. Whether to take the long position right in the beginning of the next week, guys, this choice is up to you. So, because speaking on the daily chart, from the perspective of the daily chart, it seems that market stands already too close to the current OP target. And from that standpoint of view, it seems more will be more safe to wait when the market hits the OP, hits the confluence, shows the pullback, and then start searching chances to possess ourselves for a possible more extension to the XOP. This is reasonable scenario. But at the same time, if, for instance, in the beginning of the next week we get a bit deeper retracement, or you could find, for instance, some other way to take the position on the lower time frame, say on the 5-minute chart, maybe on the 50-minute chart, that's more acceptable from the risk-reward ratio, then it's not forbidden, of course, trying to take the position somewhere in this consolidation, watching for a target around 1860 area. On the hourly chart, there's really big chances that market should keep going higher. So first is the OP, second is the same thing about the butterfly that we already discussed. Here we have a great frosting action. And you could see the market stands just in a widening triangle and calling around 1.7 target. So this type of the behavior, it's actually accompanied with some signs of the bullish dynamic pressure, because so take a look, market stands flat while the trend here is showing downward action. This combination suggests that 1618 target should be reached. And it stands very close to the OP. It's 1854 approximately. OP is 1856. So they could be hit just at once. Well, and here, this you can see here is we could get the minor bearish grabber right at this candle. As you can see, MACD is floating around it. Then you could decide, as I said, about the taking a long position in this consolidation. So if you get the grabber and market start dropping, for instance, this will increase the potential target to the area of the OP, of the actually butterfly extension. That makes me more attractive, maybe the long entry. So we could think about whether it makes sense to trying to make this scalp trade, trying to take a position when the target stands relatively close. In this case, in case of the pullback, maybe this will become more attractive. But in general, as I said, that's from the perspective of the daily chart, it seems more logical to wait and see when the market hits the OP and then try and take a position on the pullback. But the chances to reach the OP and complete the butterfly on Monday stands really significant. So probably this should happen. So that's our view on the gold market.